Alright, it seems the new hot stock to talk about in the dividend community is the YieldMax ETFs like TSLY, NVDY, etc. And I'm going to be explaining why I personally won't ever invest in any of them. We're going to be talking about what they are in the first place and the issues that I personally have with them. And look, before all you YieldMax fanboys and Reddit warriors come and defend your entire net worth in the comments section, make sure you smash the like button, subscribe before you do that. Also, if you want to go the extra mile and want to support the channel, make sure to check out becoming a member today. Get access to exclusive episodes, behind the scenes content, a stock market competition, and so much more. With all that out of the way, roll the intro.
Hello, I like money.
Alright, I'll try to put this in dummy terms, but essentially TSLY. They seek exposure through Tesla, which is subject to unlimited potential investment gains. They want to use option strategies to basically generate that dividend income. They want to use options and covered call strategies to essentially generate that dividend income and pay you monthly. So the more volatile that Tesla really is, or any of the other stocks that they cover, NVIDIA, etc., that's the more better they're going to do. So basically it trends up with Tesla if Tesla stock were to go up. And if Tesla were to go down, it would go down pretty much in line as well. Now the big thing is here is that you're relying on that volatility for your dividend returns. If Tesla were to somehow become one day not really much of a volatile stock, more of like a Coca-Cola staple one day, it would not be good for the ETF whatsoever. Also, there's no diversification here. It is literally just Tesla that they're selling all those options off of. So with all the risk involved, you're getting a 36% dividend yield at the recording this video to deal with that. And even more ironically, over the couple days that I've recorded this video, and the gap between the last time I recorded this, their yield has actually jumped up to 47% as their stock price has gone down. What a way to sum up the video. Alright, so let's get into the reasons why I'm personally not investing, and there's a lot of them, so we're going to start quick. First of all, dividend yield trap. Those are the three words that I first come to mind when I see a 47% dividend yield. This fund is targeted for dummies who base their entire investment thesis on a dividend yield. Now, obviously, there are some people who are going to hold this for the short term, hopefully to generate some dividend income, but let's go into the first reason why I'm not ever buying this or touching it, looking at it in the first place. Alright, first off, let's start with the underperformance of the fund itself when it comes to first off price return and then total return. Now you'd think a 47% dividend yield would give you some solid return, but you'd think wrong. Currently their price return over the last 1 year when this fund was actually incepted, which is another point we'll get into. Overall, VU, the entire market, is up 13.85%. This is down 28.09% just from price appreciation. Let's get into the total return because obviously dividends are pretty much the entire thing you're investing for in this fund. So pretty much, I don't love when you're investing in high yield stocks. If you're investing straight for the dividend in the short term, you don't want to see price volatility at the end of the day. Unfortunately, with TSLY, minus 28% in the last year, not a great thing to see. If I were to do this strategy, I would definitely want to, just have a company like Altria where the price doesn't really move up or down whatsoever, instead of having to time when I buy, something I'm really against. Obviously, I think it would be a little biased if I just did the price returns. We'll do the total return overall, and even with the 47% dividend yield that they offer right now, TSLY is still underperforming the market overall right now by around 5%. Crazy. If I were desperate enough in my life to actually have to invest in this fund, I would sleep horribly at night, which gets to my next point, which is unreliability and unpredictability, the two things that no investor wants to see today unless you're a Cathie Wood and ARK shareholder. This fund was basically incepted in November of last year and hasn't even been around for a year yet. And there's just no straight up data to prove whether this is reliable or not. Again, I never would, but if I were to look into one of these as potentially a short-term holding, I would like to see something with at least some track record of price appreciation, something to help me sleep at night. This actually would keep me up at night most likely, and the only data that we have right now on the price appreciation of this stock is having it go down. So I mean, it's pretty funny at the end of the day. There obviously are some low points where you would need to constantly track the stock's price, where to buy, where to sell, and that's just something if I'm looking for that income that I don't want to do. So the lack of data, the fact that it's only been around for not even a year, is one of the reasons I'm never touching this. The second reason I never touch this is just personally because of my situation and my investment beliefs in the first place. I believe in finding really high quality companies that produce large amounts of free cash flow and reward you as a shareholder through dividends, buybacks, etc. If I were ever desperate enough, the only reason I'd ever touch this would be a very short-term holding place for my cash for it to potentially grow and get dividends. With that said though, I don't think long-term it's going to grow very much either. When you have a fund like TSLY, its entire return is based off of dividends. And in the first place, I don't think dividends should be a whole part or whole reason that you invest in a company in the first place or make an investment. There is a common thought that dividends are free money, and I think that is a common thought between a lot of these YieldMax investors that 47% yield is free money. It is not free money. Well, yes, it is passive income and you're making money without working for it, so are total returns and capital appreciation and selling off a stock. Me personally, I promote real man's investing on my channel, looking at business itself, and here's an example of a high yield stock that I would invest in that's trading at a nearly 9% yield right now, which I believe is sustainable. They're producing real free cash flows, real revenues, and actually have a very strong business overall, which is of course Altria, stock ticker MO. This is the only type of high yield investment that I would ever look at and potentially parking my cash in. So the second reason, overall, it's nothing really against TSLY, but I just don't believe in it in the first place, and it doesn't really meet my personal investment goals at the moment. We're actually looking and buying a business. There is also no consistency in the dividend whatsoever. So some months that 35% yield might be a 10% yield, some months it might be a 40% yield. Overall, it is just nothing I'd like to look at personally. If when I want something that's going to produce, consistent dividend income for me, income that a lot of retirees could potentially rely on, I want something that's reliable. I want something that I know it's going to come in every month and not depend on the volatility of a stock's price. I want something that I know is going to be based off of a business and how it's performing. So the volatility of the stock price also is the volatility of dividends. Some months you just don't know what you're going to get, and that's what I really don't like. As an investor, I just want predictability. Alright, so let me sum up a few of the quick reasons why I'd never touch this and even look at it in the first place. To start off, it is reliant on Tesla's stock price and how volatile it is. And the truth is, there's no predictability, unlike Tesla's business operations, that we can tell what investors are going to be doing with the stocks, what funds are going to be doing with Tesla stock. There's no predictability or reliability, which is one of the biggest things you need to look for as an investor, especially when picking up a business. Also, there's no data or history yet. Its inception date was in November of last year, so there's no long-term track record to see how it actually performs, etc. Also, the activity involved when you need to buy this stock, it's much more, it's much more energy consuming, and you need to be way more active rather than just looking at Altria stock, its performance, how flat it's really been, or even a company like AT&T that's a high yield stock if you're looking for a short-term yield play. Just the activity involved where you need to time the buys, I just don't want anything involved with that. Also, the perception that dividends are free money. Now, this is just not a thing with, this is a thing with every investor, I feel. When they start investing, they think that dividends are free money. They are not. They are part of total return. Also, the inconsistency of dividend payments is really unappealing, especially if you're a retiree looking for that reliable dividend income that you need to live off of. That is just something I would not want to ever look for. And the entire operation overall, I'm just not a fan of, buying option-based ETFs for that dividend income. I would much rather just buy an overall market index fund and get market returns rather than underperforming, which is what's happening right now with them. Those are overall my thoughts, guys. Don't flame me in the comments section if you're a little fanboy. If I missed anything, let me know. If you want to debate me, and go ahead in the comments. Me personally, I'm just not touching it, and there's a lot of FOMO that I see from, newer based investors with this. Alright, thank you. If you made it to the end of the video, let me know your thoughts in the comments section. If you haven't already, make sure to hit that subscribe button, smash the like button while you're at it for the YouTube algorithm, and of course, while you're at it, make sure to check out the channel memberships. I'm working really hard on that. Thank you all. Love you guys. Thank you for the support. And of course, do dividend stocks, not drugs. Have a good one.